Auditing, just a formal introduction we try to understand for the day. Basic concepts we try to cover now. What is the meaning of audit? Audit is a word which is derived from the Latin word adire. Adire means to hear. Audit is the word derived from the Latin maxim, that is adire, which means to hear. Sir, what does it mean? As we know, in case of a company is an artificial person. There is a diverse between ownership and management. Ownership lies in the hands of members or shareholders. The management lies in the hands of board of directors. The owners of a company is scattered throughout the country, not available for day-to-day operations of the business. Hence, they appointed the board of directors. The board of directors are managing the company. They are preparing the important documents. Nothing but a financial statements they will prepare. Whether these financial statements are representing true and fair view or not. Otherwise, it can be window dressed also, manipulations can be made. Because the owners are there somewhere. But you are managing the entity. Whatever the report you have submitted, whether that report is reflecting true and fair view, correct information or not. Reliability of data given by management. As a shareholder, I would like to know that you have submitted the financial statements like trading account, P&L account, balance sheet, appropriation account, and notes to accounts. These are all financial statements. You have submitted the data. As a owner of a company, I would like to know whether this information is genuine or not, reliable or not. Then as a owner, I will appoint one person. He is called auditor. Auditor will collect the information from the management, evaluate the data, and forming one opinion based on the evidences. And you would say, yes, the information generated by management is true and fair. Whatever information given, genuine, reliable. When you go for audit as an auditor, you have collected some data, some statement, some records, some evidences, some information. While evaluating the information, you need some clarifications and explanations. As an auditor, I will ask some query, nothing but questions. They are giving the reply. Hearing. I hear from them. If I am satisfied, I would give clean sheet. If I don't satisfy, I will give the qualified opinion. Nothing but a conditional opinion. That's why auditing is a word derived from the word adire, means to hear. I hear from management. I hear from responsible officials within the entity. Because I pose some questions as an auditor. There are some questions raised by me. Those questions, the concerned official or the concerned in charge has to give the clarification explanation. If that information is satisfactory, then I certify the data. Otherwise, whatever the queries I have, same thing I make a report. It may be a modified report, unmodified report. We will explain these concepts in the due course of time. And whenever I pose some question, they are giving some clarifications to me. I hear those clarifications. If I am satisfied, I will certify the data. But remember, audit is not compulsory for all the entities. Audit is compulsory. Any company which is registered under the Companies Act 2013 or under any previous law, audit is compulsory, irrespective of your nature of the company. In any other case, audit is purely optional. For example, partnership, audit is not compulsory. Sole trader, audit is not compulsory. Whereas in case of LLP, audit is compulsory because registered under the law. So, wherever it is compulsory, we go for audit, otherwise not necessary. Again, the concept of hearing, to understand, I don't know how many of you remember the old movies. If you watch the old movies, Jamindar was laid down on the sofa. One accountant was just standing there. He was keep on telling the information, and the owner is listening to them, and in between some questions he may ask, otherwise accounts are over. That time the concept was like that. One person maintained the records. Whatever he does the work, he will explain to him. He said, go ahead, approved. But now, what is the concept? Head office at New Delhi. Our branches are there in the entire country. In the 29 states, we have the branches. We have the 29 branches, right? Managers are appointed. Each state we have one manager. From head office, instructions are forwarded to the branch offices, do's and don'ts. Whether those instructions and information given by management is effectively and efficiently executed or not, how do we know? As a management, we are sitting at New Delhi Board of Directors. We are taking some decisions, policy decisions. We communicate to the branch heads. You follow this. Without following, as if they have followed, they can manipulate the report and submit also. How do we know then whether they are executing my instructions effectively and efficiently? In the letter and spirit, they have to follow. Followed or not, how do I know? Branch audit. Head office will appoint the branch auditor. Each branch will send one person. The person will go there. He will verify what are the directions given by management. What branch has to do, already predefined. What they did, he will verify. He will pose some questions. And whatever the information they are given, he will listen. That's why he is hearing clarification, explanation, information from the respective authority. And finally, form an opinion, branch report is submitted to department. If there is any untrue statements are there, misleading data is there, or material misstatements are there, it is communicated to the head office. The head office will ask the concerned in charge, give the clarifications and explanation on this head, otherwise going to be held responsible. Previously, auditing means only financial audit. Audit means only financial audit, CA. But now, today audit means this is the three types. One is the financial audit, second one cost audit, third one is the secretarial audit. Company secretary can do. A company secretary can do the secretarial audit. Today audit is diversified, unlike earlier. Earlier one person used to do everything. But today that was not the case. Financial audit is done by the chartered accountant. Cost audit is done by the cost accountant. And company secretary will do the secretarial audit. Purpose is different. Financial auditor purpose is to certify these books of accounts reflecting the true and fair view. That's it. Beyond that, no other purpose. The information generated by management is true and fair. Whatever the profit or a loss they have stated in the P&L account is correct. There is no window dressing, means no manipulation of the records. Of course, we'll discuss later. Primary objective, secondary objective, we'll discuss. Just I am introducing the concepts one after one. Then what is the cost auditor? To certify that whether cost accounting records are maintained or not. Cost accounting records maintained or not. What are the cost accounting records? Utilization of material, utilization of labor and other information. Cost audit he will do. There is a difference between the financial audit and cost audit. Financial auditor will certify these books of accounts are representing the true and fair. This profit or loss is genuine. That's all. Whereas the cost auditor will help you in order to enhance the overall operational efficiency of the entity. If you want to enhance the operational efficiency, this person is helpful. How to minimize the cost of the production, how to maximize our available resources, what are the do's and don'ts, he will help you. And finally, secretarial audit. Ours is the company. Under the Companies Act 2013, under any previous law, all the applicable rules under the Companies Act are properly complied or not. How do we know? Ours is the company. As per Companies Act 2013, some conditions laid down. We have to satisfy. Complied or not? How do we know? There should be one person conducting audit, secretarial audit. There we have a secretarial standards are there. Secretarial standards. Like accounting standards are there. Costing standards are there. Here also secretarial standards are there. So what is the purpose of this? Only whether the applicable law is a letter and spirit followed or not. That's it. Yours is a society. As per the Societies Act, all the applicable conditions are satisfied. Yours is the trust. As per the Trust Act, rules are complied or not. He will going to certify on that. So guys, remember, today audit means financial audit, cost audit as well as secretarial audit. And operational efficiency of the entity is going to be examined by these persons wherever required. Fine. Now, what is the definition of auditing? Auditing definition in our material, this is the all of you new or old scheme. It's the combination of both. How many of you old scheme? Are there anyone? Okay, no problem. Syllabus is the same. Only new scheme students, some topics were extra. That's it. Otherwise, same syllabus for both of you. Cool. And what is the definition of auditing? This part you remember. And this part we have to learn and butify word to word. According to ICAI, Institute of the Chartered Accountants of India. Despite you have the books with you, I advise you please write this one time. Rather reading 10 times, writing one time will definitely give us some clarity on that. Then each and every word we try to understand the meaning. Okay. Auditing means, according to ICAI, remaining author definition up to you, whether to learn it or not. But ICAI definition, we have to learn it. According to ICAI, auditing is because some old students doesn't have the books with them, so that you please make a note better. Auditing is a systematic and independent examination of data, statement, records, operation, and performances and performances within the brackets financial or otherwise, financial or otherwise of an enterprise, for a stated purpose, for a stated purpose. In any auditing situation, auditor perceives and recognizes, auditor perceives and recognizes the prepositions before him, for examination, collects evidence, evaluate the same, and on this basis, formulates his judgment, which is communicated through, his audit report, Now check once we try to understand the meaning of this one. According to ICAI, auditing is a systematic. What is the meaning of systematic? Generally we say, I am very systematic person. People use this language. What does it mean? Systematic means pre-planned. In a very orderly manner he will behave. He knows very well what he is doing there. Auditing also systematically will happen. How? First we have to appoint an auditor. For that, engagement letter we have to send. Scope of audit, objective of audit we have to state. Facilities we have to provide. Audit plan, audit program, audit working paper. It happens in an orderly manner. In a haphazard manner, it won't happen. That's why it is a systematic, means pre-designed, pre-defined, very orderly they are going to do this work. A systematic and independent examination. What is the meaning of independent? Guys, remember, auditor's work is not influenced by any person in the organization. That is called auditor's independence. Means he must have a freedom. As per the directions of the managing director or the CEO, CFO, COO, if he does the work and submit the report, he doesn't have independence. Whatever he felt, whatever he found, he got a freedom to express his opinion. Management cannot influence the auditor. I want a report like this. No. Let me give report. Independence means simple line always. Auditor's work is not determined by, influenced by, restricted by anyone in the organization, either internally or externally. What all his findings were there, let him report. So this is auditor's independence. Remember, many times this word come across. Auditor must have independence, means I must have a freedom. My work is not influenced by anyone. Simple example to understand. You want to take up the BPC. Parent said MPC. You don't have independence. Isn't it? Choice was not there for you. You said, no, go for MPC, by PC. No, dad, go. Okay. It's not your decision, others' decision. Here also, you are doing the work. Let you give a report. Not according to will and wish of third party, you don't make any report. Auditor's work is not influenced by anyone, which means cash book is there. Debit side items you need not verify, only credit items verify. What is to be done? Let me decide. How can you direct me? You do this audit, you don't do this audit. This cash book you need not to do. Last month only internal audit completed. We haven't detected any kind of irregularity. Cash book not necessary. Fixed assets you need not verify. How can you give directions for me? Let me see the information available to me and let me decide how exactly I have to plan my work. Thereby remember, auditor's work is not influenced by anyone. That is called independence. How auditor's independence will increase and how can he get the independence? Simple example I would say. For example, auditor's appointment is according to will and wish of the CMD. Assume chairman come managing director. Whatever he said, it is final. My appointment, my reappointment, my remuneration, increase in the remuneration and extension lies as per the will and wish of CMD. Then whatever the CMD said, I have to do. Otherwise, my services are not going to renewal. My fees is not going to increase. If I detect any fraud done by CMD, will I report? No. First I go to CMD. So, fraud detected. How much? Sir, 50 crores. What to do? You tell me, sir. Hide it. What was our last year fees? Sir, 10 lakhs. Okay, this year, 20 lakhs. Thank you, sir. Who knows? Isn't it? Because my appointment, reappointment, salary, remuneration, everything, his wish only, na? I don't have independence. Even a detected fraud, I can't report. Whereas, my appointment as an auditor lies in the hands of audit committee under section 177. In the company, audit committee is there. Committee will choose the auditor. Then, I need not please anyone. What is the criteria for appointment of auditor? Qualification, experience, suitability. Right? Based on my work performance, my services are going to renewal. I need not please anyone. I will enjoy more independence. That's why auditor's appointment lies in the hands of audit committee. Committee means group of people. I can please one person, but not all the persons there. Am I making sense? Thereby, if audit committee is there under section 177, he got a more independence. That's why company law taken care of auditor's independence. That too today, you are there auditor only for one term. One term means 5 years. 2 terms in case of a firm. Individual as a CA. You are appointed as a CA, auditor. You are there in office only for 5 years. Later, must and should go on rotation. Rotation compulsory. How to leave organization after 5 years you are not there. Whereas you are all chartered accountants. You create one CA form. That form can be appointed as an auditor for 2 terms. 2 terms means 5 plus 5, 10 years. Then what is the cooling period? The cooling period is 5 years. Again, after 5 years, you can come back. By that time, the existing majority directors might have retired. We know, na? 1/3 is the non-rotational, 2/3 is the rotational. Every year, 1/3 is retiring. Obviously, these people won't exist. New management will be there. Again, to build a rapport, it will take its own time. Thereby, guys, remember, auditor's work is not influenced by anyone. That's why ICAI as well as Companies Act is taking a proper steps how to strengthen this independence. For that, audit committee is the best example. He got a independence because of his nature of appointment. If my appointment lies in the hands of one individual, I should always do some favor for him. Otherwise, he may not reappoint me. If he does something wrong, I can't report immediately. I will report to him first. Because my appointment, reappointment, or remuneration lies in the hands of that person. That's why committee. Auditor's independence is enhanced. Right? Guys, remember, auditor will enjoy absolute independence. Means his work is not influenced by anyone in the entity. Top level, middle level, lower level, supervisory level. No one. Let him decide. So systematic means orderly, and independence means work is not determined by anyone. Do's and don'ts of auditor is not determined by third person. It is an independent, systematic and independent examination of data, statement, records, information and performance. Organizations are two types: trading concern, non-trading concern. Trading concern, we prepare the trading account, P&L account and balance sheet. Whereas the non-trading concerns, we prepare the income and expenditure account, receipts and payments account and balance sheet. Then once I appointed as an auditor, I collect the data, records, information from the management. That information I have to analyze. The submitted data is genuine or not. So collect the information, data, records, vouchers from the client. The organization may be either profit or non-profit. That's based on the, whether it's a financial or otherwise. Otherwise means non-financial. Audit is compulsory for Section 8 companies also. Non-profit company. Audit is compulsory there for that sake. Okay, no? Now guys, verify. Collect the data and of an enterprise for a stated purpose. What is the stated purpose? Internal audit, external audit, tax audit, otherwise admission of a partner audit, retirement of a partner audit, death of a partner audit. Otherwise, company would like to borrow some loan. Then what banker will ask? I want an auditor's report. Purpose is borrowing the loan. Company want to declare the dividend, interim dividend. Internal audit we have to conduct. If you tell the purpose, two companies want to amalgamate. Sale of a company. If you tell the purpose, according to purpose, audit will be planned. Stated purpose. For example, our purpose is tax returns. Accordingly, audit will be done. Tax audit. My purpose is information technology audit. Accordingly, audit will be done. Environmental audit. Accordingly, audit will be done. You tell the purpose, man. It is a purely external audit. Means books of accounts are representing true and fair view. That's why if you tell the purpose accordingly. For example to understand, we have the internal examination within the college. One way we prepare. We have annual exams conducted by university. We prepare differently. Purpose is different, na? Whereas here also in the class, we conduct some exams. During the examination period, sometimes some of you serious, some of you not so serious. I know that. But still some are serious. As if they are writing their annual exam, they prepare. Some people very casual attitude. But when all are appearing for the December examination, definitely serious. Purpose. According to purpose, we have to prepare ourselves. Get ready for that. You tell the purpose accordingly. People said, hey, we are going for picnic for 10 days. Accordingly, arrangements will be made. We are going for the pub. Accordingly, arrangements will be made. We are going for the traditional marriage. And accordingly, go. Purpose we have to state. Here also is what kind of audit I am going to do. Is this internal audit, external audit, environmental audit, operational audit, or efficiency audit, economy audit, which type of audit I have to conduct. If you tell the purpose, accordingly I will do. For example, internal audit. Internal audit purpose is interim dividend. In between the two annual audits, if any audit is there, it is called interim audit. What is the purpose? To declare interim dividend. You tell the purpose. Hey, I want to go for interim dividend. Immediately internal audit. Admission of a partner. Only for admission sake, audit. A partner died. We want to settle the account. Conduct an audit. Purpose is different. And the tax returns. I want to borrow some loan. Banker will ask, I want a auditor's statement, 5 years projected profitability. What auditor wants? 5 years projected profitability. Auditor has to prepare what is the current year profit. Then projected means estimated. Estimated profit, he has to prepare one statement and submit. If that copy give it to banker, he may sanction the loan if he is satisfied. That's why tell the purpose, stated purpose. Am I making sense? Okay. Now see, in any auditing situation, auditors pursues and recognizes prepositions before him, and examination collects the evidence and evaluates the same. On the basis of that, formulates a judgment which is communicated through auditor's report. Okay, you gave the data, information, purpose you told. Now I have to examine this information. What is that I am going to examine? I have to collect records of data. I have to examine. I collect the evidence. What is the evidence? Brief introduction I am giving. Later part again we will discuss, because many times these words will come. What is the evidence? Evidence is a prima facie proof. You said, sir, I passed my CA. Evidence. I passed my CMA. Evidence. I passed my CES. Evidence. Given by certificate given by ICAI or ICSI. Evidence. Here also, whatever information you have generated, I think all of you know how to make an entries in the books of accounts and voucher posting, voucher posting, voucher posting. It may be debit voucher, it may be credit voucher. You take the voucher, accordingly entries are made. On the voucher also, cash book folio number will be available. At a random, if you want, you can check it. Thereby collect the evidence. Evidence is the proof. Evidences are two types: internal evidence, external evidence. Internal, external. What is internal evidence? An evidence generated internally, laying internally. An evidence generated internally and laying internally. Example, time login departments are there, login, logout. Employee login, logouts are maintained internally. Records are generated internally, laying internally. Based on that login, logout only, salaries we have to prepare. Second one, salaries paid. Salary statements are drafted internally, maintained internally, internal evidence. One more example, stores ledger, maintained internally and keep it as a record as internal evidence. These are all internal evidences. Internal evidences can be tampered. Whenever you want, you can redraft it also with a previous date. Today also I can prepare one report. Isn't it? Just replacing the document only, no? Internally. You can do anything and everything. Internal evidence is there. Other one, external evidence. An evidence originated outside the organization. An evidence generated outside the organization but laying within the organization. Example, sales invoice generated internally but laying outside. Purchases were made, invoices are received from outside, laying inside. One more example, fixed deposits were made in a bank. Certificate is generated outside but laying inside. Now guys, remember, for any transaction, internal and external, both the evidences are available. For every transaction, two types of evidences are available sometime. When internal and external both the evidences are there, auditor can more rely on external evidence rather internal evidence. Sir, internal evidence only available, there is no external evidence. Rely on that. Sir, no evidence. Sometime for everything evidence won't be there. No evidence. Then remember, management letter of representation. In simple, management representation, MR. Remember, evidence is must and either internal evidence or external evidence. When both are available, reliance on external. When external is not there, internal. When no evidence is there, ask the management, give one certificate for this. As if it took place. No evidence, no entry. He must not accept. Tomorrow otherwise, he has to face the consequences. Why did you accept it? Management started giving some clarification, explanation orally. You ask them, instead of oral, put on a piece of a paper, sign and give. I will take it as an evidence. Today you said orally, tomorrow you say, when did I said? How to establish this? Thereby collect the evidence. Evidence may be oral evidence, written evidence, documentary. Any evidence can be accepted. Fine. Internal, external. Collect evidence, evaluate the same. What is the evaluation of the same? I have the evidence with me. Evaluation means whether this evidence is genuine or fake. For example, whenever I got an evidence, I have to see reliance, reliability. Reliance and reliability. Relevance should be there. First of all, relevance, then reliability. Relevance means pertaining to our entity, not a personal. Second one, reliability. Reliability means who gave this evidence, where it got generated. Some confirmation you can get, a internal confirmations are available. You can get a confirmation from either internal or external. Place the reliance on that. Evaluate the evidence. Then evaluate the same, and on the basis of that formulate a judgment. Evidence is available, evaluated, got a confirmation, fully satisfied, I formed one judgment. Judgment is my opinion. I am communicating my opinion in the form of a auditor's report. What is auditor's report? Remember, the end product of any audit is auditor's report. Auditor's report is classified into two types. One is a unmodified report, modified report. Unmodified report, modified report. This unmodified report and modified report. This unmodified also called unqualified. Unqualified report. Okay. And this modified report, you can call it as a one qualified report. Second one as a adverse report. Third one as a disclaimer. Disclaimers report. Later part it will come. This is almost to last stage. We are going to understand basic outline I am sharing here. Auditor's report is a end product of any audit. It is classified into two types, modified, unmodified. Unmodified means no change, clean report. Unqualified, like a acceptance must be unconditional or unqualified. We speak, there are no conditions as such. And here it is modified report. The modified is classified into three types. One as a qualified opinion. What is the qualified opinion? Conditional opinion. Modified means here one conditional. Conditional means qualified. Example, as we know guys, 100 ACs are purchased according to record. Voucher is available. Board of Directors report sanction is there. Board sanction. Voucher is available. Payment also made. In the cash book, entries are available with the help of voucher. Vouching is done. When as the auditor go for physical verification, when he go for verification, he found only 60 ACs. Will he give the clean sheet? What he say? He will ask a clarification. According to voucher, 100 ACs are purchased. When I done the verification, I understood only 60 ACs are available physically. May I know where remaining 40 ACs are? If you give clarification for this 40 ACs, I will give the report. If not, my report is going to be voucher number so and so, dated so and so, whether 100 ACs. When I go for a physical verification, I could see only 60. Subject to clarification for 40 ACs, I am giving the following report. If the 40 ACs clarification was not given, means 40 ACs amount of fraud is there in this entity. Qualified. Qualified means conditional. I am not satisfied with information available. Qualified means conditional. Unqualified means unconditional. For example, according to voucher, 100 ACs are purchased. When I go for a physical verification, I could see 100 ACs. Whatever the query I raised, I got a satisfactory explanation. Nothing to object. Then I give the clean sheet. Unqualified opinion. Nothing to object. Am I clear? So, unqualified means clean sheet. Unconditional. Qualified means conditional. Subject to clarification, this report. And other one is adverse opinion. If there is a material misstatement in the books of accounts. If there is a material misstatement in the books of accounts, MMS. Material misstatement. What are the material misstatements here? Remember, A, C, D, P. ACDP. What is A? A stands for amount. C stands for classification of accounts. C for disclosure, D for disclosure, P for presentation. There may be some wrong interpretations. Capital expenditure as a revenue expenditure, revenue expenditure as a capital expenditure. Material misstatement. Otherwise, amount point of view, instead of writing the 10 crores, they added one more zero. Not intentional, sometimes unintentional maybe. But this is a material misstatement. What is the material? Substantially affecting. Isn't it? 100 crores. By mistake wrote 10 crores. It will affect or not? Our profits will abnormally either increase or decrease. Thereby classification. Another one, amount point of view. Disclosure. You have to disclose certain items in the P&L account and balance sheet. Some information was not properly disclosed and presented as per the norms. Concealed the data. Information was concealed. And disclose the requirements as when accounting standards wherever necessary we have to follow. While presenting inventory, AS2E is there. How it has to be valued. Presentation is required accordingly, followed or not. Thereby, friends, remember, and wherever you come across this word MMS, material misstatement means ACDP. Keep this word. Now onwards, whenever this word will come repeatedly number of times, whenever I say material misstatement, 3 words, 4 words should come into our mind. ACDP. A for amount, C for classification, D for disclosure requirements, and 4P for presentation. If regarding these 4 areas you have done something wrong, that is called material misstatement. Is there any material misstatement in the books of accounts? Yes. Means huge irregularities were detected. Then I give the adverse opinion. Adverse means negative opinion. Other one is the disclaimer. What is the disclaimer? Auditor refused to give the report. Auditor refused to give the report. A disclaim. No, I won't give the report. Why, sir? Assume I have appointed you as my auditor. Today morning at 10 o'clock we have scheduled our audit work to start. By all the way, along with our team, we have come for audit. Then I said, yesterday night a raid was conducted. Income tax people seized the books of accounts. Excise people seized the books of account. Customs people seized the books of accounts. There are no books. I said, sir, no books, and yesterday raid was conducted. Books of accounts were seized by income tax, customs, excise people. By all the way, anyhow, we have come now. Do one thing, give one report and go, as if we have done the audit. Will you give the report? Yes, sir, no. Yes, I will pay the fees for you, no problem. You take the fees, as if you done the audit, give a report, will you? Disclaim. Sorry, no report. Disclaim. One more. By the time you go for audit, yesterday night there was a short circuit of a power or a fire accident. Books are destroyed. He said books got destroyed. No problem. Give a report. Here is our fees. Disclaim. Sorry, I can't give a report without audit. Last example, natural calamity. On account of natural calamity, books got destroyed. No audit, no report. Disclaim. Remember, these examples are fixed and you won't change. Remember, books of accounts were seized by income tax, excise, customs, no audit, no report. Books were seized by these departments, no audit, no report. Second, fire accident. Third, natural calamity. These examples are common in any book you refer. Other than this, no examples for the disclaimer. Auditor refused to give a report, isn't it? If you don't write examination, can you ask the ICAI give a certificate of passing of exam? They say disclaim. And without writing exam, how could I give, man? No, examination fees paid na. I have already paid the fees for you. Give the report. First you write exam. परवाना यार फीस तो दे दिया ना. No. If you want to take back our fees, we don't want. We want to give any false certification. Am I making sense? So report is the end product of the, remember, report is mere opinion. Auditor's report is mere opinion. Auditor felt, I felt. How the audit is done? It is a 100% audit. No. At a random, I select certain items. The selected items arisen to conclusion. I did the audit. Means from journal entry to until the balance sheet. Those items I verified. Then I am not certifying that the whole books of accounts are representing the true and fair. The selected items which I did the audit, it is true and fair at a random. Now guys, verify. What is the meaning? Check it once. It is a systematic and independent examination of data, statements, records, information or performance, financial or otherwise, of an enterprise for a stated purpose. In any auditing situation, auditor has to pursue and recognizes the prepositions before him and collect the evidence, evaluate the same and form the opinion, that is judgment, which is communicated through auditor's report. All the words are clear here in the definition. Auditor's report is a he felt. For example, I did the audit. I gave the adverse opinion, assume. Then management was not satisfied, ordered another audit again, appointed you as an auditor. And you may give qualified opinion. One more audit is done. He may give unqualified opinion. Sir, how does it possible? My basis for audit was different. Your basis for audit was different. Your basis for audit was different. Na? I said every 15th item, every 15th voucher you take. Every 15th voucher. That's my audit. Random only, na? Other person has come. He said every 10th voucher you audit. One more person come. He said every 25th voucher. Our basis were different. What I audited, I found like that. You felt like that. She felt like that. Isn't that's why auditor's opinion may be differ from one audit to another audit, because audit basis are going to be different. Your selection was different, my selection was different. I said every 20th item, vouchers we have taken vouchers. Monthly vouchers are there, na? Receipts and payments side. We took every 15th voucher. I said. She said every 25th voucher. He said every 100 voucher. 100, 200, 300, 400, 500. Your bases are different. Your bases are true and correct. Your bases are true and correct. My bases were absolutely irregular. That's why my opinion is different and your opinion is different. Am I clear? So, this is the definition side. Check it once, guys. Are you able to understand? Systematic means orderly. Independence means auditor's work is not influenced by, determined by any person. Then he has to collect the data, information, records, either performance or otherwise. Trading concern, non-trading concern. Purpose we have to state. According to purpose, it will be designed and defined. And collect the evidence. Collection of evidences are compulsory. And evidences are two types. Internal evidence, external evidence. Whenever there is for any transaction, internal, external, both the evidences are available. Auditor rely more on external evidence rather internal evidence, and evaluate the same, form an opinion, that is judgment, which is communicated through his auditor's report. The report is classified into two types, in simple, modified and unmodified. Further simple if you want to, unqualified, qualified, and you can say adverse opinion, disclaimers opinion. Fine. MMS. MMS means material misstatement. Material misstatement examples were always ACDP. A means amount. I think you remember errors and rectification, you remember? How would you write those examples here? 525, they wrote as the 552. I hope you remember errors and rectification chapter. Some mistakes we will do, not intentional, unintentional, we have to correct it. Here also same, right? And we have to ratify the same and submit a report as such. Okay guys, this is the definition side. Now, what are the essential features of auditing? Regarding this, verify guys. The essential features of auditing, it involves evaluation and verification. First of all, what is watching? What is verification? One outline I will say, then you won't have a confusion while reading the sentences. Okay? Watching. What is watching? Whether transaction occurred or not. Occurrence. Occurrence. I am doing the voucher means the transaction took place. Whether transaction occurred or not, how do I know? Do watching. Means take the voucher. Watching, posting. Voucher, posting. Voucher, posting. According to voucher, whether proper posting is there or not. That's called watching. If watching I done means, what does it mean? Transaction occurred. Occurred. Occurrence took place. Then what is verification? Verification is generally truth and truthfulness. In simple, I would say verified. I have verified. Means I have verified the truthfulness. Here verification means existence, physical existence. Example, land purchased, building purchased, machinery purchased, furniture purchased. Land purchased, voucher is there. Watching done means occurred. Correct? But where is the land? I have to go and see physically. As an auditor, I can go, or I can ask my assistants. They can go, and boundaries are available. And I don't know how many of you seen the property papers. They can write boundaries south, north, east, west. Description was there, and accordingly inquire and come back. Verified. Verified means it is in existence. It is in existence. True. According to watcher, watching said occurred. Verification said it is in existence. Motor vehicles purchased. Watching. Verification means counting physically. Vehicles are with the branch. Branch manager has to certify. These vehicles are with us. With the RC copies they have to submit. I hope you are understanding meaning. Watching, verification. What is watching? Occurrence of the transaction. Verification, existence of the transaction. Is this clear? Chalo. Now see this meaning. It involves the evaluation, verification of the reliance, reliability, adequacy of evidence in support of the verifiable information, that is vouchers, documents, explanation. Voucher means we know what are the debit vouchers, credit vouchers. Second one is documents. Whenever you buy, the credit invoices are available, invoice purchase invoices are available, and the loan borrowed documents are available, documents, and explanation, clarification given by the concerned official. Second one, an analytical, critical, investigative review of the system of accounting and internal control. Accounting system. In case of a company, in order to keep the books of accounts, we have to follow double entry system only. Company always follow double entry system. And one more is internal control. What are internal controls? Just I am giving information. We have big chapter on this head in the due course of time. Internal control system. Now one words I call it as ICS. Internal control system. Internal controls. Nothing but internal control system. In case of a partnership, we have the partnership deed. Do's and don'ts for internal management of a partnership. In case of a company, we have the articles of association for internal management consist of regulations. A regulation is a mandatory. I hope you remember. Similarly, every organization survival is based on the internal controls only. What is the meaning of internal control? The rules and regulations to be followed in order to accomplish organizational objectives. What are the rules and regulations to be followed in order to accomplish organizational objective? What purpose we have come? You know pretty well. In order to accomplish that objective, what are the do's and don'ts we have to define? The internal controls consist of what are the general rules and regulations for administration and management, accounting and finance, operations. What are the operations and production, marketing, finance, HR, and finally, I would say compliance. The compliance is again, yours is a company as per the Companies Act 2013. Yours is a bank as per the Banking Regulation Act. If yours is a insurance as per the Insurance Act. If yours is a cooperative society according to Cooperative Societies Act. If yours is only society as per the Societies Act. Compliances. Now see the points. Internal controls consist of the 4 areas to be covered. First one is management and administration point of view. What are the do's and don'ts? Define. So you don't have any confusion what is to be done, what is not to be done, how to be done, isn't it? Do's and don'ts, a detailed note will be there. Tomorrow when you go for organization for a job, you will come across it. Every organization is having one manual. Do's and don'ts are there internal. And second one is accounting and finance point of view. What are the do's and don'ts? Nothing but a own capital, borrowed capital. Own capital, share capital. Borrowed capital, your debentures, deposits, otherwise loans and advances from the banks or financial institutions, creditors, loan capital. Own capital, borrowed capital. How to raise the capital? What are the do's and don'ts? Define. Capital, financial control management. Another one is operation side, production department, do's and don'ts. Marketing department, do's and don'ts. Finance department, do's and don'ts. Human resource development, do's and don'ts define. Each department is having separate set of the rules and regulations to be followed. And finally, compliance. Means what are the laws applicable to me? Mine is the company, as per Companies Act. Certain rules and regulations I have to satisfy. What are those? Predefined. And you have to timely submission of the returns Q1, Q2, Q3, Q4. AGM completed. Within the 60 days annual report we have to file with ROC. Right? We know some conditions we have to comply. Those compliances. So, you have to define the rules and regulations in order to accomplish organizational objectives related to accounting and finance, administration, management and operations plus compliance side. If mine is the bank, as per the Banking Regulation Act. Mine is insurance company, as per Insurance Act. Mine is a cooperative society, as per the Cooperative Society. Mine is the electricity company, according to Electricity Act. Am I making sense? So, ICS, Internal Control System. Wherever you come across this word, this meaning has to come into your mind. Frequently you come across this vocabulary. Internal controls, internal controls. Internal controls means rules and regulations. Whenever I ask this question, you have to answer like this only. The rules and regulations to be followed in order to accomplish organizational objectives. That's the literal meaning of internal control system. The internal controls relating to management, administration, accounting, finance, operations, compliance. Right? We'll take up later again. Its continuation is there. Internal audit is there. Internal audit. Internal audit is there. Then we have internal check. We'll take up in the due course of time. Wherever necessary, these meanings we'll discuss with you. So this is about a system of accounting, double entry system and internal controls. What are internal controls, guys? Internal controls about rules and regulations in order to accomplish organizational objectives related to management, administration, accounting, finance, operations and compliances. Okay. Now see the next one. The information audited by the information audited may be either financial, non-financial, because trading concern, non-trading concern, service motive, profit motive accordingly. There should be standards or the criteria for evaluation of information systematically and a scientific manner. Nothing but what are the basis for the selection of items scientific manner. First item, 10th item, 20th item, 30th item or 50th item, 100th item. One scientific methodology we are adopting there. And the auditor should be competent and independent, qualified, possessing a qualification, and this is called COP, Certificate of Practice. Who can be the auditor of a company? Guys, remember, any person who is a member of ICAI may be either individual, otherwise LLP, otherwise a form of chartered accountant. 3 words. Who can be the auditor? Either individual or form of chartered accountants or LLP. Usually, a body corporate cannot be appointed as an auditor. exception LLP. LLP can be appointed as an auditor of a company. So here only a qualified person. Who is qualified? If you are a member of the ICAI with COP, Certificate of Practice, can be appointed as an auditor. The auditor may be either individual or form of chartered accountants or LLP, Limited Liability Partnership. Fine. To end competent, nothing but he must update himself. Auditor has to update himself. For that, I think you remember these words also in the group 1 session we have done. Whenever auditor is appointed, maybe CA, CMA or CS, respective organizations are conducting some seminars and workshops for practicing professionals. Whenever changes in the accounting, auditing, law, etc., they conduct a seminar, they deliver the lecture for them, which means they are updating themselves. They are promoting their course. Otherwise, what will happen? Outdated product, no? You don't know what is happening in and around. Probably you are busy with your audit work. So that seminars, workshops compulsorily you have to attend. Further, then only a renewal of your membership will be there. Otherwise, it won't be renewed. For that sake, must and should people will go and attend the session. Eminent people will come. They deliver the lecture on that. And they can have a brief outline. Already professional. An outline is enough, you can understand. Later, books are available for them. They can update themselves if they want, thereby. To ensure the reliability of information, authenticity of the assertion. What is assertion? Assertion means, remember, declarations. Assertions means declarations. In the trading account, gross profit is announced. Net profit announced in the P&L account before the tax and after the tax. In the balance sheet, assets and liabilities were disclosed, which means they are called assertions of management. This is our property. This is our net profit. This is our net loss. These are our assets. These are our liability. You made a declaration, that's called assertion. Assertions means declarations made by management. So here, to ensure the reliability of information, authenticity of assertion made in the financial statements relating to enterprise, whether profit oriented or not, whether it is required by law or not, means audit is not compulsory for everyone. For individuals, if your total gross income is not exceeding 45 lakhs, audit is not compulsory. Business point of sole trader up to 1 crore, no audit. Over and above 1 crore, audit is required for the sake of tax liability. Tax audit is there under section 44AB of Income Tax Act. That time it is compulsory. That's why otherwise it is not compulsory one. That's why. And to enable the auditor to form the opinion on the statements regarding the true and fair view of the affairs of the business and profit and loss made during the financial period disclosed therein. Here two words we are observing. One is the true and fair view. What is the true and fair view? And state of affairs of the business. The state of affairs means balance sheet. And other one is here profit and loss in the P&L account. What is the true and fair view? Please write few lines I am giving. Concept of the true and fair. Concept of true and fair view. Concept of true and fair view. Concept of true and fair view. Write one by one. First one. No asset is neither overvalued nor undervalued. No asset is neither overvalued nor undervalued. Second, all material changes in the assets are properly disclosed. All material changes in the assets are disclosed. Third, there are no unrecorded assets in the books of accounts. There are no unrecorded assets in the books of accounts. There are no unrecorded assets in the books of accounts. Fourth, no liability is neither overvalued nor undervalued. No liability is neither overvalued nor undervalued. Next, balance sheet is prepared according to Part A of the Schedule 3. Balance sheet is prepared according to Part A. Balance sheet is prepared according to Part A, comma. P&L account is prepared according to Part B. P&L account is prepared according to Part B of Schedule 3 of Companies Act 2013 of Companies Act 2013. Next, there is a consistency. There is a consistency in following accounting policies. There is a consistency in following accounting policies. And finally, all unusual, exceptional, non-recurring items were shown separately. All unusual, exceptional, non-recurring items were shown separately. All unusual, exceptional, non-recurring items were shown separately. That's all. Now, how do we remember this? From assets point of view, there are 3 points. Verify. No asset is neither overvalued nor undervalued. Which means, if asset is overvalued means depreciation not properly provided or depreciation not provided. Overvalued. Undervalued means required rate is only 5% or 8%. You provided the 28% depreciation. Undervalued means any one point you are adopting there which is not adoptable according to law. Second one, all material changes in the assets are properly recorded, which means what? Some assets were sold out during the period. Some new assets were acquired. The assets which are sold shall be removed from the list of the fixed assets, and which are acquired has to be added back to the assets. That's called all material changes in the assets are properly disclosed. And the assets were sold out but not removed from the list of the fixed assets, but still reflect in the books of accounts as if organization owned by it. It is giving a false information to users of the data given by management. And third one is, there is no unrecorded asset in the books of accounts. What does it mean? I hope you remember NTC accounts, non-trading accounts, all of you know. In the NTC accounts, an adjustments will come across one adjustment. Typewriter was purchased on so and so period, which was not recorded in the books of accounts. Typewriter was purchased on 1st August, but not entered in the books of accounts. Means there is a unrecorded asset in the books of accounts. Then what we used to do from 1st August to 31st December, March, we provide the depreciation on that, and again depreciation P&L account debit side, in the balance sheet asset will show in the accounting treatment point of view. Whereas here assets are purchased but entries were not made. Auditor must ensure that there is no unrecorded asset in the books of accounts. Means all assets which are acquired by entity are properly made entry in the books of accounts. Must certify. And the third one is, so 3 points about assets. One is that no asset is neither overvalued nor undervalued. All changes were properly recorded and there is no unrecorded asset in the books of accounts. And second one is liability point of view, only one. No liability is neither overvalued nor undervalued. Third one, this is format's point of view, verify. Financial reporting framework. This word freeze, and this phrase will come in the auditing side. Remember always, financial reporting framework. If we have seen this line, they were asking about format only. Financial reporting framework, which means whether formats were properly followed or not. Vertical formula today, we have to prepare the balance sheet in a vertical form. One format is given. In that format, assembling of items were there. Did you follow or not? P&L account according to part B. There is one prescribed format given. So, financial reporting framework. Wherever you see this word, remember that whether format is followed or not, as an auditor, I have to certify. So, I must ensure that P&L account is prepared according to part B. Balance sheet is prepared according to part A of the schedule 3 of the Companies Act. Followed or not? Followed. Certify. Not followed. Report. Okay. Third one. Fourth one. See there is a consistency in accounting policies. Consistency in accounting policy. What does it mean? What is accounting policy? Best example, depreciation. Accounting policy, best example is depreciation. 1 year, we provided the straight line method. Next year, diminishing method. Again, diminishing method. Again, straight line method. Can you change the policy as you like? There should be some consistency. If I want to show more profit or less profit, if I change the depreciation policy, profits will change. That's why remember, there should be consistency. In the financial statements, what we state? Trading account, P&L account, balance sheet, then cash flow statements, then notes to accounts. In the notes to accounts, we have to state what accounting policies we have followed. Last year, what was the statement we have made? What is the current year? Both should be one and the same. If there is an inconsistency, auditor must qualify. If I change the depreciation policy, prices will fluctuate. Sir, can't I change the depreciation policy? Yes, we can change the depreciation policy. When you can change accounting policy, guys? Any idea? Change of accounting policy. According to law? Yes, excellent. Whenever the law said, law was amended, they said follow this method. Follow. No one is above the law. Second, ICAI has stated that you follow this accounting policy. You have to follow. And third one, if I change accounting policy, it will reflect the exact financial position of the entity. In the sense, my books of accounts can be presented effectively. I can present it effectively. If I change a policy, the presentation become more effective. Change. Only three points. Change of depreciation. Yes, you can change. When law had changed, change. ICA said, change. If I change the depreciation policy, I can present my books of accounts in a better way. Change. Otherwise, no reason to change. Only to show the window dressing, don't change our accounting policy. That's why consistency in accounting policy. Am I clear? Another one, last point, unusual, exceptional, non-recurring items should be shown separately. For that, best example is winning from lottery. It won't happen in every day, every year. Occasionally, very rarely can get this money. Show it separately. Don't mix with your operating profits. Winning from horses, rarely to happen. Maybe many times loss will be there. Profit won't be there usually. Sometimes, somewhere you purchased some shares, so suddenly prices have shooted up, you got a windfall. It won't happen every day. So, all unusual, exceptional, non-recurring items, non-recurring means it won't repeat every time. Show it separately. So, once the auditor certified the true and fair review, he certified that these books of accounts are representing the true and fair, means these all 3 plus 1 plus 1 plus 1 plus 1. How many? Altogether 4 plus 3, 7 points he has to certify. Assets point of view 3 points, liability point of view 1, financial reporting framework 1, accounting policies 1, consistency 1. Of course, last one, unusual items. So he has to certify the moment. You can see the true and fair view means not 1 point, all these 7 areas he has to examine, satisfy, then say that these books of accounts are representing the true and fair view. He certified means these are all areas he has already examined, satisfied. Otherwise, don't certify these books of accounts are representing true and fair. Are you understanding the meaning of true and fair now? Verify. No asset is neither overvalued nor undervalued. No liabilities were neither overvalued nor undervalued. There are no unrecorded assets in the books of accounts. All material changes in the books of accounts are properly recorded. And P&L account prepared according to Part B. And balance sheet prepared according to Part A of the Schedule 3 of the Companies Act 2013. And there is a consistency in accounting policy. And finally, all unusual, exceptional, non-recurring items were shown separately. So now onwards, wherever you, this is a question, short answer question, important, direct question, true and fair view. Question is the 7 points, so a test it, you can write enough. You need not start, no introduction, nothing. Straight all the points. So auditor certified that these books of accounts are representing true and fair means he had already examined all these criterias. That's the meaning of true and fair view. And state of affairs of company with a balance sheet is representing the every information genuinely. No window dressing, nothing. And of course, he must have that proper disclosure. In the P&L account, whatever the profits are also correct. Profit or loss is a genuine case. Fine. This is about definition of auditing, essentials of auditing, some keywords definitions we try to understood for the time being. And this is only a nature of auditing. If you go through, just give one reading and nothing much is not there. And if you verify now today, see this one. Today auditing is no longer concerned with only financial records and review of the compliances of law and costing records and operations. I told already, today auditing is a 3 types of audit: financial audit, cost audit, secretarial audit. This is the point, right? And if you see this one again, the ICE according to ICAI, the definition only got repeated again. Same point. There is nothing, repetition was there here. Okay. And one other definition was given here. And then what is the relationship between accounting and auditing? Okay, we see this in the tomorrow's class better. But appeal would be today class, today itself you try to finish off. Since you got books with you, you learn it. Even the old scheme also, you see the notes, just check it once, same points we have how to follow. Much change is not. Same points. Okay, no? And only new scheme students, some syllabus is extra. those points, one, two topics here and there. At the end, we'll take up those points which were uncovered for you. Thank you guys. Welcome to group 2. But remember, today work, today itself please complete. Auditing, one simple, I can't say what exactly it is. Looks very simple, very easy. While writing, you face a lot of problem. Writing of auditing is the toughest. Unless because that vocabulary you have to accustom to that. It will take some time just to practice. You have another almost 5 to 6 months duration. Time is there, 5 months at least. Don't postpone the things. At least we have to learn through our past experience. Whatever happened, happened. I can't go back and correct myself. At least now onwards, I should work on my toes from the day one. Then I can control anything and everything. Things will happen in my favor. Thank you guys.